All right. Thank you everyone for attending this month's market update webinar for the month of June. So this month, there are a few changes to the webinar. I'm not going to read through the disclosures. You can read through them yourselves, but please make sure to use the Q&A button at the bottom to ask any questions, and I will address them at the end. A quick bio of myself. My name is Jeremy Eppley. I'm a certified financial planner, certified private wealth advisor, accredited investment fiduciary, accredited portfolio management advisor, chartered retirement planning counselor, and I have my master's degree in personal financial planning. You can learn more about me on my LinkedIn. And Silverstone Financial is a fee-only fiduciary registered investment advisory firm. We provide comprehensive wealth management services, including financial planning, investment management, tax prep, estate documents, prep and planning. You can learn more about us on our website. So one of the changes, at least for this month, is we're going to start with stock market performance, mostly because it is the more boring side of this month. There are a lot of events that happened that I want to talk about near the end. So we're going to fly through the performance of the stock market. So in May, the Dow Jones was up 2.3%. The S&P 500 was up almost 5%. Mega caps, so the very largest companies that are traded on the exchanges, were up even more at 6.5% for a month. It's a really strong month. It's led by NVIDIA, another great month by them. A lot of hype behind their AI with their computing chips. They produce computer chips for those that are unfamiliar with the company. Small caps were up. The smallest companies traded on the stock market were up 4.8%, so right in line with the S&P 500. Global stocks, so non-US stocks, lagged as they have for the past many decades at 2.5%. Bonds were actually up 1.5%, which is pretty strong for bonds in general. Usually they stay flat. 1.5% total return on bonds is pretty good. Gold was in line with bonds at 1.8, 1.9%. Crude oil fell slightly. For oil, a 6% swing isn't actually very significant, but it fell, which helps those of you that fill up your gas tanks and helps with inflation. So in general, good to see. And Bitcoin being the best performer on this list of indices at up 14%. For the year, you can see that Bitcoin still at the top of the list, over 60%. Interesting to see how the exchange traded funds that hold Bitcoin that were approved at the beginning of this year continued to provide demand for the cryptocurrency. It's more widely used. BlackRock's exchange traded fund is the largest Bitcoin holding company now. It passed Grayscale, which was the original that came out years ago, but Grayscale had never been publicly traded on public exchanges. So there's a lot of shakeup that happened after the SEC was forced to approve the Bitcoin ETFs. Year to date, I'll just fly through it. S&P 500 up over 10%. Mega caps up 14%. Bonds slightly down, mostly flat. Small caps, I think, is the most interesting that we see here at the underperformance of small cap stocks relative to the S&P 500. You can really see that there's a premium being paid for the largest companies and a discount for the smaller companies. Dow Jones, somewhere between S&P 500 and small caps, but still 1/4 of what the S&P 500 did. Those value tilted investors investing in older companies, more mature companies, have underperformed. Gold up 13% for the year. Crude oil, again, a 7.5% swing for the year is pretty minor for oil. This average S&P 500 chart I like to show. The outer ring shows historical returns of the S&P 500 from 1950 to 2017. And so it kind of shows the seasonality, the cyclicality of the markets. Each month, historically, December and November are some of the best months. You might have heard of the Santa Claus rally. In comparison, September historically is the worst month. So what we've seen, so the inner circle here is what actually happened this year. At January was in line. We had a very, very strong February, up 5.2%. March in line, but still stronger than average. But 2 months ago, April, we had an upset. Usually April is one of the strongest months, but we were down 4.2%. I was assuming that it's because we had such a strong beginning of the year that some of those gains were given up. And then May, we made up for it. We're back to where we ended March on. And that's a relatively strong historical month. I'll quickly show the S&P 500 daily chart. I don't have that much to say about it right now. Sometimes you've seen arrows and lines all drawn up on it, and I have a lot to mention, but I don't want to focus on it too much this month. You can see that there's been a clear upward trend since November. November through December, January, February, March, until the beginning of April, it had very little volatility, just went straight up. S&P 500 performed quite well. And then we finally got to a little bit of a sell-off in April, and now it's picked back up. We're essentially where we left off at the end of March. So again, very, very strong stock market performance for this year at least, and the end of last year. And I'm pretty neutral on outlook. I think it'll continue to keep going up unless there is some black swan event or some sort of triggering problem that comes and affects the stock market this year. We shall see. So I sped through all of that, mostly to give a little more time on all the notable events. We have 2 slides, lots of logos to look at. So the first one I want to talk about was a news story that came out in May about how FTX, which was the defunct cryptocurrency exchange run by Sam Bankman-Fried, who is now in jail, they went through the bankruptcy process, and the bankruptcy lawyers announced a plan that all their customers with $50,000 or less of assets on the platform before it was halted would get 118% of the value of their assets at the time the company filed for bankruptcy. Now, there are a couple of notes there. So they say that 98% of their users fell within that $50,000 or less category. Saying that they're paying it in full isn't totally true, because there's still that 2% that had large amount of assets on the platform. But the bigger catch to their statement that they're repaying their customers in full with interest was that they're pricing it at what Bitcoin was in November 2022 when they filed, which Bitcoin was $18,500. So they're getting 118% recovery of $18,500, which comes out to about $21,900. But if they had access to their Bitcoin and they held it throughout, which they might not have, they might have sold it. There are a lot of ifs there. But if they had held it, Bitcoin today is in the 60,000s. So they're getting 1/3 of what they should be getting if the fraud and all the problems with FTX being a cryptocurrency exchange domiciled in the Cayman Islands with no regulatory oversight and the ability for these essentially, I'll call them convicted felons. I won't add any other kind of uh, descriptor to them, but they were able to essentially siphon off large portions of money. Um, it's interesting to see and have that resolution. The bankruptcy filing, I don't believe, has been approved by judges yet. The money hasn't gone out to affected customers. But I'm curious if any, you guys could chat in the Zoom webinar if you feel that it's right to call it repaying customers in full, because technically 98% of their users are going to get back 118% of the value of their assets at the time that they went bankrupt. So in full, I suppose, but it's also still not taking into account what the markets did afterward. Interesting to see. Another news story that came through was that the Senate passed a bill forcing TikTok's parent company, which is ByteDance, it's a Chinese company, to sell their U.S. TikTok business or face a ban, I think in 2025, something like that. It has to do with security concerns for U.S. data and such. It'll be really interesting to see if this bill ends up being enforced or if there's other ways that TikTok will get around it. Would be the first, maybe not the first time, but definitely the largest company that would be forced to sell via a government mandate. It's worth billions and billions of dollars. I'll keep you updated as I hear more. I just found it to be an interesting story. Another really interesting story that has at least filled up the finance news headlines was the reemergence of GameStop. I don't know if any of you went out and watched the movie that was released, I believe, last year about how the Reddit traders, the GameStop, the meme stocks, all that. It was a pretty good movie. I did watch it. I recommend it. It was fun. Not 100% truthful. It was a little bit skewed to one way or the other. But anyway, GameStop is back in the news because Roaring Kitty, which was the moniker of Keith Gill, which is in this picture right here, he had kind of started all the meme stock trading frenzy when he had posted his analysis of GameStop back in the day. He revealed out of the blue he had been off the internet for I think 2 years or something like that now. He randomly reappeared and shared that he had a $116 million option bet on GameStop, a positive option bet, thinking that it'll go up. And he posted that on Reddit, and that caused this whole frenzy to happen again. And a whole lot of meme stocks took back off with a lot of retail traders buying it. Interesting to see also a lot of hedge funds getting into it now, trading momentum and just trying to catch the bandwagon and think that they will be smarter than the retail traders. We'll have to see. I'll caution those listening that as a long-term passive investor, I advise against trying to trade GameStop or against GameStop or do any kind of meme stock. I will say betting rather than investing is definitely dangerous. If you have a small account that you want to play with, that's fine. But your retirement accounts, I've definitely seen some horror stories where people get a second mortgage on their house to invest in this stuff, or invest their entire IRA into a meme stock, and then depending on when you buy it and when you sell it, it has not turned out great for a lot of those individuals. So be careful for those interested or engaging in those kinds of trading activities. The last big news headline on this slide was that the Dow Jones Industrial Average passed $40,000, 40,000, not dollars, 40,000, the index number for the first time. It was on May 16th. Not too long ago, it was at $30,000. These large numbers, I'll say, mean nothing. The Dow Jones Industrial Average, in my opinion, out of all the major indices that are followed, is the least interesting, the least impactful, the least, maybe not impactful because it has a lot of history to it, but the indice itself was built before essentially people knew how to build good indices. So it's based on price rather than market cap, and it is only 30 companies, and how the companies are chosen have some problems in my eyes. So it's more of a symbolic event that has lots of news headlines, is important for those of us in finance, but it shouldn't affect any of your day-to-days. More importantly, it means that the market went up. And for most of you, that's helpful because you have money invested in your 401ks, you have money invested for retirement, all these different avenues that you have assets tied to this Dow Jones Industrial Average. Anyway, moving on to this final slide, which has a whole lot of interesting events. So one that I will cover because it was the #1 news headline of the past month, but it's not necessarily a finance headline, was that a Manhattan jury found the former president, Donald Trump, guilty on all 34 charges of falsifying business records in his New York hush money trial. I won't cover it too much. I mostly brought it up because I had a few questions from clients about how this could potentially affect the markets or their investments. And I'll say, I don't really see a direct impact. There's always volatility, especially when large news headlines hit. But there's no way to play this headline or invest in a specific way or not invest in another way to try to avoid losing money or to make more money. So those of you that were worried about this kind of headline or future headlines similar to it, or the eventual outcome of the 2024 presidential election, history has shown politics have short-term impacts on the market, but in general are hard to find long-term trends that are directly attributable to elections or anything like that. So my constant recommendation that I had said before during this webinar: stay long-term invested, passive, index-based investing, and you'll ride through those blips and stressors and worries. And as long as you stick with it, history has shown that that's the best strategy, instead of trying to hop out of the market and hop back in depending on how worried you are about news headlines. The other headline that is more in the finance realm, which just happened on Monday, I believe, was the New York Stock Exchange had a technical glitch, a technical issue, where it displayed incorrect prices for about 40 stocks. And the most notable one was the Class A shares of Berkshire Hathaway, which is in the hundreds of thousands of dollars per share. And the New York Stock Exchange instead had accidentally shown the price down 99.97%. I think it was from $300,000 to $400,000 per share down to 190 or something like that. So they were down almost 100% for about 2 hours, and there were a number of high frequency trading firms and hedge funds and individual traders that scooped up some of these shares at a near 100% discount. Anyway, after 2 hours, the issue was fixed, and all the trades during that time were canceled because they're not necessarily fraudulent, but they were incorrect. So for those of you worried about another glitch happening, it's technically possible, but I would expect the same outcome where any incorrect trades would be canceled, reverted back. And again, it shouldn't be a worry for any of you that are long-term passive investors. It shouldn't affect you at all. But it was a very interesting finance story that definitely dominated some news headlines for those of us that follow finance. A very interesting one that I did not expect and was not related to the New York Stock Exchange glitch, but was announced around the same time, was that there's going to be at least a filing. It's not official or approved yet, but a new national stock exchange based in Dallas, Texas, called the Texas Stock Exchange. So instead of the NYSE, it'll be the TXSE. It has backing of BlackRock and Citadel Securities, which are BlackRock is one of the largest asset managers in the world. It might be the largest one. And Citadel Securities is a large market maker, a hedge fund, massive in the world of finance, even though a lot of the times they're in the background. They actually had a lot to do with the meme stocks. They were taking the other side of the trade. That's a story for another day. But the TXSE, their goal is to take on the NYSE, the Chicago Exchange, the NASDAQ. They have $120 million in funding, so they're very well funded, and they're hoping to launch the exchange in 2026. All that said, it shouldn't have any impact on any of you, definitely in the short term, most likely in the long term. Most of these stock exchanges are routed through whatever exchange leads to the best execution price. So more competition is better, but none of you will likely see the impact. If there is an impact, it'll be minor and it'll be behind the scenes. And you might be able to buy a share of a stock for 1/20th of a penny lower price. Again, it won't affect your day-to-day, but it's interesting to see such a large shakeup with a new stock exchange, potentially, again, it's not approved, but potentially coming soon. The final event, news story that I want to mention happened today, which was NVIDIA, which I had mentioned earlier on with their highest performing returns in the S&P 500. They're leading and dragging everyone up. They became the second most valuable company on the US stock market, surpassing Apple and still being behind Microsoft. For those of you that don't know NVIDIA, they produce graphics chips, graphics cards, GPUs, for those of you that understand the acronyms and such. And they are mostly getting very hyped up because of artificial intelligence and the need for these chips to drive that. So because of the artificial intelligence hype, which some of it's definitely justified, other of it is a little bit frothy, unjustified. NVIDIA has definitely benefited from that because they can sell billions and billions and billions of dollars worth of these semiconductors, these computer chips, to run all the supercomputers and data centers that are going to be running Google's AI and Microsoft's AI and Tesla's self-driving and all these different innovations that we're seeing. Essentially, NVIDIA controls a large portion of the essentially gas that those vehicles are driving on, because the next future is computer learning and artificial intelligence. So NVIDIA being the best out there and capitalizing most on it, they're just printing money. So it has skyrocketed. I think it's 200, 300% up within a year or year and a half for a massive company going from, I think it was 600 billion to over 2 trillion, something like that. it's definitely significant. It has shifted markets, changed how indices are made. Very impactful. Changed geopolitics because most of their chips are created in Taiwan, so even more impactful there. It's interesting to see. So we finished in 30 minutes. It was a lot to cover, a lot of news stories, a lot happened in the month of May. I wanted to cover. I'm happy that all of you attended and listened. I had seen 2 questions come in, but both of those were answered from what I had said after they had asked the question. So I don't see any other questions. I'll wait a minute to see if any other come through, but if not, thank you all for attending this month's market update webinar. I hope to see you next month, and hopefully we'll not only have good news with the stock market performance and whatnot, but we'll also have more interesting stories, because these webinars are definitely more fun in the events that, or the months that have lots of events, rather than in months that are kind of boring. Anyway, I'll see you all next time, next month.